Hi, this is Troy Patton. Today's Monday, February 23rd. The market seems to be in a little bit of disarray today. We started up almost 1% on the day with some news out of Washington, but obviously the more they talk, the more the market falters. We keep hearing all about bipartisan support for this and that, whatever. Well, obviously everything's fairly partisan currently. We have different speakers blaming different folks in other parties. The bottom line is this. We need to get back to some earnings in the financial sector. It's pretty obvious to help support the market prices where they're at today. Estimates for next year are looking pretty solid. I think we're going to be pretty close on the operating earnings per share. If that's the case, with these low interest rates historically, I'd have to say that the market's fairly valued. I would say we're probably carving out a bottom at this point in the market. I'm not saying it can't go 5% lower. It most certainly can. It can most certainly go 5% higher from here. In fact, I'd be very surprised if we don't kind of trade within this range and keep retesting these lows over and over and over again until we see something solid out of Washington as well as the earnings on Wall Street with the financials and those firms. That may take a while. It may work its way into '09, depending on the energy sector. See how that plays out. Oil prices are falling. We may see some pressure on earnings there from some of the big names like Chevron, BP, and ConocoPhillips, etc. So right now, we're looking just to kind of tread water in the market. We're looking for opportunities where they present themselves, whether it's looking to get the market to move up or down, either way. And again, focusing on asset allocation, as even though it's not always the most sexy thing to do, but maybe again, as I've always said before, the boring or the new sexy is going to be the old boring. These lows that we're hitting now are not any surprise to us or to any of you who have been watching this, because we've been calling this over and over, and it's not uncommon to retest these lows. But as far as performance goes over the next 12, 24, even 36 months, I really see some decent upside to this. I think this government has no problem printing their way out of this mess. It may cause some inflation down the road, but for right now, we're really focusing on a light deflationary period, mild inflation, as the PPI and everything, or CPI was just reported as being up a little bit. So, I'm not even so sure that we're going to get into that massive deflation area that's really bad for the market as well. Again, this is Troy Patton. I'll be back to you next week with some more market commentary. Today is Monday, February 23rd. Thanks.